Hello, everybody. Thanks for downloading this video. It's going to be a incredibly informative session for the next 10 or 15 minutes, where we're going to clear up some terms and terminology as it relates specifically to directors and officers liability and general liability, and try and put that into perspective. And then we'll also deal with the whole notion of short-term insurance and insuring your HOA assets, and maybe put that into perspective as well. And we're going to run this session where I have Chantal Salzer with me from NIC. Most of you downloading this video will know Chantal very, very well. NIC are fantastic supporters of ARC. They've been business partners of ARC for many, many, many years. And not only do they assist in providing us quotations and proposals, they have, and it has been seen, that they have in fact intervened in claims that our member communities may have, even if they're not insured with NIC. And that just shows the level of service that Chantal and Charmaine and the rest of the team have done for us as an industry. So it's fantastic to have you with us, Chantal, this morning. Thanks for giving up the time.
Hi, Jeff. Hi, everybody. Thank you for having us and giving us the opportunity.
So let's launch right in. I'm going to pose the first question that I believe is quite important. There's many confusions around when we talk about D&O, then we talk about fidelity, and I just wanted maybe to kick off, Chantal, with a brief difference between D&O and fidelity. Maybe let's kick off there.
Okay, cool. So fidelity provides cover for loss of money, securities, and other properties due to acts of dishonesty committed by either your employees alone or in collusion with each other. Whereas directors and officers liability, on the other hand, provides cover for mismanagement and wrongful acts. The cover for wrongful acts might be intended. The others might be intended, not intended, but intended to steal from the association.
Okay. So is this what the CSOS referred to in their compulsory cover? Which one of those is that, or is this not included in that, where you've got to work out a percentage of your budget and then your total money in reserves and take out insurance for that? Is that what we're talking about here?
That is on the fidelity side, yes.
That's the fidelity side. Okay.
That is on fidelity. That is the monies. That's where the insurance comes on in that. Whereas, as I said, the directors is the mismanagement and wrongful acts on management of the company itself. Yes.
Okay, got you. All right, so let's carry on with what is the difference. So we've got that now. So then what is the difference, and I've heard many members ask me, between professional indemnity and D&O? Is there a difference between professional indemnity and D&O?
Yes, definitely. So professional indemnity is another word for errors and omissions protection. Okay, it covers you and your business against claims for financial loss or damage sustained by a third party as a direct result of negligence or errors. Okay. Whereas directors and officers forms part of a more personal liability insurance that provide general cover to the firm's directors, managers, and senior executives. And that protects them from lawsuits and judgment brought against them.
Got you. I got you. So when we talk about D&O cover, and we're sitting with a board of 10 people, the 10 directors or trustees, I would imagine, that are volunteers, are in a position where they're making decisions all the time. They're making decisions to spend money. They're making decisions around a budget. Of course, they've got to get the normal authorities from the annual general meeting, but they're still at risk. So what this says is, cover yourselves in your personal capacities because you are director of the homeowners association.
Yeah, they make themselves vulnerable for lawsuits due to decisions that they're making for the company.
I got you. Thanks for that. All right. So now I want to move on. Generally, the day-to-day responsibilities and the kind of out-of-board work is often performed or delegated down, even though the board is the ultimate decision maker, to committees. There may be standing committees, there may be ad hoc committees, and there may be people that aren't on the boards that will then serve on those committees, and they would have charter documents and all of that. The question, however, is, if you take D&O cover, does it mean that every committee member that may come onto a committee enjoy the same cover as the directors in terms of the D&O policy that you would write for them?
Unfortunately not, Jeff. With committees, what happens is the board members can't hand over their fiduciary duties to board members. However, to committees, sorry. So committees can make suggestions, but they can't make the ultimate decision, final decision on whether or not it's being implemented. So no, they will not be covered under the D&O section.
Is there an opportunity for me, if I'm in my personal capacity and I'm a resident on an estate and somebody asks me to participate, the risk side of it wouldn't apply to me because I'm not in a position of making decisions. Is that correct? It is the directors that make the decision. So I'm more of a provider of assistance, or out of committee work where perhaps we do recommendations, but the ultimate authority lies with the board. That's why D&O cover is critical, not important, absolutely critical for members of the board, but doesn't apply to committees because it doesn't need to.
Correct.
All right, I've heard this term before, broad form public liability. Broad form public liability or public liability, what is that?
Okay, so broad form liability provides protection for businesses where they become legally liable to pay damages arising out of injuries, damages due to third parties or properties during performance of their business or services. For example, when you drive through the gates at a estate and the boom closes and it's due to neglect from one of the guards or a malfunction or something, that property being damaged, that will fall under your liability or your broad form liability for that.
Okay, got it. Hence the word broad.
Yes.
Yeah, okay. So I'm quite...
Happens in connection with your business, yeah.
In connection with your broad, in connection with your business, 100%.
Okay.
That makes sense. All right, so let's move off D&O cover and professional indemnity and all of these things. Maybe just to remind everyone that if you do not have any form of D&O cover, if you're serving on a board and you do not have, it is critically important that you speak to Chantel. We'll leave her email when we close off this discussion. Speak to her. It's insurance that you need to take. It's so that you can sleep at night, basically. Because you are placed in a position, you're voluntary, generally you don't get paid, you want to serve, at least make sure that you are covered. So speak to Chantel about that. So let's move on to general insurance briefly, Chantel. Why is insurance cover so important? And very broadly, what are the types of insurance that an HOA should get? And focus a little bit on the determination of values. Who determines those values? I know you have said a number of times that it's really important to get a risk assessment done or a risk survey, not to be confused with a quantity surveyor, but a risk surveyor. We understand that. And perhaps at another session, we should speak about some of the misconceptions around, oh yes, I've done it, I've had a quantity surveyor and they've done all of that work. Is that same thing as a risk surveyor? We know it's not, but high importance is general HOA insurance cover, and what kinds of insurance should we have in place?
Okay, so the directors or trustees has to consider the needs of the HOA by carefully scrutinizing the constitution or the MOI for reference to what insurance is needed. Okay, and always keep in mind to check the minutes of the meeting for any resolutions that might have been passed in respect of insurance.
Yeah.
Important documents and facts that needs to be considered for your insurance needs is a list a list of insured immovable property, as well as improvements on buildings, whether it's something that's newly built or extended or renovated. Okay. An inventory of all movable properties is required, which include gardening equipment, gaming rooms, gym equipment, kitchen equipment, all those stuff. Everything that is the property of the HOA. Okay. Then obviously having a qualified quantity surveyor to come out and do a proper evaluation on the common property so that the values of the common property is correctly insured from the beginning. Okay. Further to this, we have to keep in mind that liabilities, broad form liability, public liability, fidelity, those are very important insurance covers to add to your existing cover or your newly taken out insurance cover.
Yeah. Okay. Talk to me about the importance of certain areas. Like, I know you often highlight the higher risk in terms of entrance areas, guardhouses, walkways, play areas, specifically in relation to third-party liability claims, because
yes,
you've got other people coming in. So what I hear you saying, Chantel, is a list of all movable property, a list of all immovable property, a proper valuation done on it, a proper risk assessment to make sure your higher areas of risk. I mean, what comes to mind is sprinkler systems. If you're on a golf course, the last thing you want is your sprinkler system to go down. So you need to include that in your requirements so that you could put together a proper schedule, a proper policy document, which people need to read and understand properly before they go into signing anything. And I know you guys are sticklers at that. Let's get agreement of exactly what's got to be covered, so that we are able to sleep at night. I love using that terminology. In a sectional title scheme, it's a little bit different. Explain that to me in respect of the units in a scheme versus a free title scheme.
Okay, so whereas a sectional title scheme forms, when a sectional title scheme forms part of the HO, it is advisable that it's both insured with the same insurer or same broker. Okay, this is to ensure that the liability risk and the material risk can be looked at as a whole, without potential disputes or gaps in cover that obviously shouldn't be there. Additional products, we might recommend additional products, okay, whereas we take additional directors and officers liability for the sectional title, which will be separate because of separate boards and separate directors. Okay. Fidelity cover depends also on who deals with the money. Is it a sectional title separate to the HOA, or does the HOA deal with all the monies? In that regard, it will also depend on would they need a different fidelity policy or not.
So I assume that would also apply if a sectional title scheme has a managing agent.
Yes.
You know, too often we find that we simply, if we're running a sectional title scheme, or we look after mini sectional title schemes within the bigger environment, that we often then don't focus on what our real needs are. We say, oh, don't worry, it's taken care of. The managing agent may be taking care of it, which they may well do. It doesn't take away the responsibility of the trustees to make sure they fully understand what their cover is and what their specific difference is, because they're part of a sectional title scheme. And that's why often... Sorry, carry on.
Sorry, yes. It also doesn't take away the responsibility of the trustees to ensure that the managing agent has that cover, get a copy of it and keep it on file, and make sure that they renew it. It does happen that the managing agent falls into hard times, or they forget to renew that, and at the end of the day something happens. Remember, the trustees are still liable for that, so that will come back to being a directors and officers claim against the trustees for neglecting their fiduciary duties.
And of course, correct me if I'm wrong, it is incumbent on the trustees to choose the best possible insurance cover, if we're talking sectional title schemes here. And one is not forced ever. This is a confusion in the industry. You're not forced to take your insurance through the managing agent. Very often the managing agent will be able to provide it, but you're not forced to. And you are encouraged, and I know Chantal and Charmaine say this all the time, you're encouraged to look at alternate options, even if just from a pricing point of view, but more importantly, when it comes to claiming. And I know... Cover, that's exact.
Yes.
Your cover, so these three aspects, as I understand it, Chantal, the premium you pay, what you covered for, and what happens when you claim. All of those three things have to look together and holistically. Yes. All right, well, this has been a fantastic discussion. Thank you so much, Chantal, for joining us today. You certainly put things into perspective. And after this video, you'll see the contact details for Chantal at NIC Insurance Brokers, been business partners to ARC for a long time. And we really, really value your participation and taking the time out to perhaps clear up some myths that are there. So thanks for joining us today, Chantal.
Great pleasure. And anybody is always welcome to phone me if they need any advice.
Excellent.